Tax day, April 15th. Ooh, bad day. Yes, for many are having an aspirin or two this morning with their coffee, knowing what they've got to do today. Um, so good luck with that, and hopefully you'll make it through the day not too bad. I'm going to do my first hypo training session. How I look at a market. This is my hypothesis for the day. Sometimes I get lucky and a trend will develop in the market that is very clear to see. The volatility bands are running up. It's perfect. That's, picture this in your mind. Wouldn't we like to have this every day? This is what we want. But inevitably, price will come back for the pullback and then range sideways is what it's doing currently. Well, here's the hypothesis. Um, the market is going to go make higher highs and higher lows if it's in an uptrend. If it's a downtrend, it's going to make lower highs and lower lows. And if it's just ranging, you're gonna sell the high and you're gonna buy the low. Very, very simple. This is Dow theory: higher highs, higher lows, sideways, and ranging condition and downtrend. So you just need to figure out where you are on a day-to-day basis because price will fluctuate fractally, meaning the weekly chart is going to be easier to trade, obviously. The daily chart, the 60-minute chart, the higher up the evolution you go, the wider you can sit out these fluctuations and stay in the overall trend development. That's why the turtle traders were so successful because they took the deeper drawdowns, allowing themselves to stay in a market. But it works when you can do that. So, since my budget isn't that big, I break it down by wanting to see the higher time frame trend for as long as possible in a world I can live in. And this is 30 ticks of damage that I would take if I were wrong about the market condition because you can get wrong. But when I have my chart set up to make it so I feel more confident and I don't trust anybody or anything. I've got to have plenty of trust in there before I put my hard earned money to work. So I want to know what I'm looking at and then I want to know how to jump in because that's all basically we're doing is jumping into a market and then holding on to a profit target. So I've set the bars up so that I can see the pullbacks as easy as pie because I can do that with these bars. And so if you can do it, why don't you do it? So I do it. And you can get the trend continuations just super simple. Super, super simple. Knowing where you're going to go on a chart is just as important to where you've been. And that's why a higher time frame top-down approach is mandatory. When you see the markets are not behaving well today, that's because it's Friday. Traders are getting in late. They've already made a pile of money this week, so they want to hold on to their gains. Or those that did not have such a successful week are licking their wounds and they don't want to give up any more money unnecessarily. So right now it's not the optimal condition to trade. You want to wait for a news event or a chart location, something more fine-tuned to tell you where you are. And right now, for me in this market, it's just pass. Find a market that's behaving in this type of structure because this is what we want to trade. So you can, find it on your chart, realize what it is you're looking at, and then go find it. So it's like an Easter egg hunt. I have my chart set up to help me make that discovery. It's like looking for gold. In fact, I have my gold river on my chart because when price is in a nice move, it likes to come back and test the upper boundary of this level. And it's a level that the algos are tied to. And that's another quest, is like finding out where the algos are hitting their marks and then enter the trend back in the direction of the volatility. So I learned to trade volatility and then in that direction when possible. So this is on the, had a crude chart up earlier, so let me put this on the index futures. It changes a little bit. Each one is for its own particular open outcry. Otherwise, the algo is the same. So this is tied to like the open outcry pit session. If you'd like to trade Globex, you can dial it down to the generic direction guide, and that will get you into anytime the core solver is firing off, you have a clear direction. You want to jump down on your lower time frame chart. What day was this? This was the 4th. You can go to your lower time frame. Here's the 4th, obviously. And the bar is set up to automatically take those. We're just waiting, really, for the market to behave itself. And we want to see this each time. And it's as simple as that. And there's no better place to take a trade than to hit those when they pull back into these areas. This is VWAP, this little dotted band, and this is my volatility markers, my levels. You can set these levels, you can widen it if it's more volatile, or you can shorten it if it's way too high. You want to try to get as close to these turns as possible. And so that's why I love the setup that I've got, because the bar will turn and my indicator won't fire off until that turn has been made. So when the bands are sloping in the direction one way or another that match the higher time frame trend, that's when you want to jump in. You wonder why I even bothered to say that, because this higher time frame trend can be opposite of what the core volatility is doing. And that happens once in a while. And that's like really freaky. It's like, do I do this one, or do I come up here and try to catch it when it turns around with the trend? But I think inevitably trend follows volatility. So be careful with that. But otherwise, the river of gold is a great place to take a trade off of, because price will, often turn at this center value area. So it's a pivot. So this is my river of gold, because when price pivots or inflects off of it, that value area, then take the trade, right? Even if it's for a short-term location. So when you're range trading, it's easy to do, because then you control where this is going. Range trading just means that the institutional traders are not participating, and it's the retail traders pushing each other back and forth in the market. Okay? So, but you still can trade it. And I'm just trading my volatility. I'm always looking at volatility, and I'm looking to previous locations to trade to on the chart. Initial balance from the previous day, as you see right here, that's that open outcry time period. Open initial balance 1 hour period. So 1 hour away from the open, this is where it was. Here's the open, the pink line. So this 1 hour initial balance low, you got your inflection off of it. You just know to hold off on your trades, because when price spikes through it, it's first going to clear the previous pivot high, and then you take it down. In this case, it did not break through. Price elected to keep the range and just is pulling up to the other previous point of control level. So I do like range trading. That's just a different topic and a different solver. I have a solver to range trade. Two solvers, the value areas and the KXD. I'm giving a webinar next week and I'll explain those two templates in more detail where I can take the range trades. I apologize, I don't have those templates loaded here, but this is the main direction guide. A few other custom templates I'm working on. And I'm teaching myself what I'm looking for and to set the market up to first find that condition when it sets up. Right now, nothing is set up directionally that I'm permitted to trade. So I'm probably sitting on my hands today because the markets are choppy. And I can tell right here on my playing board. Once the markets are all in line, each one probably is going to have a row that goes all the way across. And that's my heads up that I can get into the market, because that's when the volatility is kicked up and institutional players are probably in here. Let me go back to that 30-minute chart and explain what I'm talking about. Once a pivot, one of these pivots are taken out, like right here, that means that we are trying to break into a new range level. So we're coming back right now to test this previous pivot point, and this is either going to be a bounce off location higher, or it's going to break through and fail and come back to the low again down here. So that's what we're waiting for the market to decide what it's going to do. Data that came out indicates a lower CPI, so that means we may not see that June rate hike. So I would be very curious to see why we would not get a double bottom bounce up here, because that would be the perfect trade. Double bottom bounce back long and an uptrend. So I'll see if the traders see it my way for the E-mini and be looking for a reversal to go back long somewhere at one of these support levels, or this prior point of control could be a good level here at 2068.50. So that's what I'm looking for today, and explain a little bit more how I trade. I will be going more in depth about my individual templates and their core solvers next week in my video with shark indicators, my webinar. So it's a live webinar. I'll send my members an email link to it. If you would like an email link to that webinar, just send support@jatstratingstrategies.com an email, and we'll send you the link. Thank you so much. Have a good weekend. Trade well.